This is part 2 of the Chapter 3 lecture series on journal entries. Let's get started. The tabular format that we learned in the previous video is not actually done in practice. It is simply a learning tool that is used to visualize the effects of accounting transactions on the accounting equation. In practice, we prepared what are called journal entries to record accounting transactions. However, before you can learn journal entries, you must first learn two key terms, which are debits and credits. Don't let these terms confuse or intimidate you. They simply indicate what we need to do to an account to make the balance go up or down. The account type determines whether an account needs to be debited or credited when the balance is going up or down. Every account within an account type reacts the same way to a debit and credit. So let's look at the expanded accounting equation to remember our account types. As you can see, we have three account types that are seen on the balance sheet: assets, liabilities, and stockholders' equity. And we have the three account types that feed into retained earnings: revenues, expenses, and dividends. These account types are listed in the chart in your notes. I have also indicated in the chart how debits and credits affect each account type. As you can see, if an asset balance is going up, we have to debit it. If an asset balance is going down, we have to credit it. If a liability balance is going up, we have to credit. If it is going down, we have to debit. If a stockholders' equity balance is going up, we have to credit. If it's going down, we have to debit. If a revenue account balance is going up, we have to credit. If it's going down, we have to debit. If an expense balance is going up, we have to debit. If it's going down, we have to credit. And lastly, if a dividend balance is going up, we have to debit, and if it's going down, we have to credit. The third column indicates what the normal balance of an account is. A trick to remember the normal balance is it is whatever increases the account balance. So for example, the normal balance of an asset is a debit because debits increase an asset balance. You must know this chart. This is one time where memorization will actually help you in this class. Know this chart like the back of your hand because your knowledge of this chart is critical to your learning how to prepare journal entries. Now that you understand debits and credits, let's talk about journal entries. I've provided 3 helpful hints that hold true for all journal entries. First, each journal entry will affect at least 2 accounts. Second, each journal entry will have at least 1 debit and at least 1 credit. Third, the total debits must equal the total credits. We must follow these rules, otherwise the accounting equation will not remain balanced. Your notes also include several tips relating to the proper form of a journal entry. We will talk about these tips whenever we look at our first journal entry in a moment. As you will learn in the next 2 chapters, there are several types of journal entries. The journal entries that we prepare in Chapter 3 are called general journal entries, and they are recorded in what's called the general journal. These journal entries are used to record accounting transactions. The other types of journal entries have different functions, which we will talk about in later chapters. When you are analyzing a transaction to determine the proper journal entry to prepare, you must answer 5 questions. First, is the transaction an accounting transaction? If you answer yes, then answer the next 4 questions. If you answer no, then this transaction does not need to be journalized because it does not affect the accounting equation. If we answer yes to the first question, then we have to determine what accounts are affected. Third, are the account balances going up or down? Fourth, do we need to debit or credit the accounts based on your answer to the third question? Lastly, by how much? We have already answered 4 of the 5 questions when doing the transaction analysis. The only question we have to answer now is the 4th question. Should we debit or credit the accounts? To illustrate, let's look at the first 3 transactions for Sierra Corporation. The first transaction happened on October the 1st, and Sierra issued common stock in exchange for $10,000 cash. We know from the transaction analysis that this is an accounting equation. We also already know that cash and common stock are affected. We also know that cash is going up and common stock is going up, and the amount for both is $10,000. The only thing we haven't talked about yet is whether to debit or credit the accounts. Well, look at your chart in your notes. We know that cash is an asset, and as you can see from your chart, if an asset balance is increasing, then we must debit it. We know that common stock is a stockholders' equity account, and based on the chart, when a stockholders' equity account balance increases, we must credit it. Now we know everything we need to know to prepare the correct journal entry to record this transaction. However, knowing all of this information is not enough. We must also learn the proper form of a journal entry. If you are provided the date, you should list the date first. Then you should have a column for the account title, followed by a debit column and a credit column. The columns must be in this order. You cannot, for example, put the credit column before the debit column. We would indicate the date in the date column because the date is provided. We would then enter our account titles. The question is, does it matter whether we list cash or common stock first? The answer is absolutely. You must list your debits first and then your credits. If you have multiple debits in one entry, then you would list all of them first, followed by your credits. In this transaction, cash is being debited, so we list it first, and we enter $10,000 in the debit column. We then enter common stock. However, you do not line up the account title under cash. You must indent the account title. Anything being credited must be indented. We then enter $10,000 in the credit column. Remember the 3 helpful hints I indicated earlier? Let's see if they hold true. We have at least 2 accounts, so the first rule is followed. We have at least 1 debit and at least 1 credit, so the second rule is followed. And finally, our total debits equal our total credits, so the third rule is followed. Therefore, we are happy with this journal entry. Let's look at the second event. On October the 1st, Sierra borrowed $5,000 by signing a note. We know from the transaction analysis that it is an accounting transaction. Cash and notes payable are affected. The cash balance is increasing, as is the notes payable balance, each by $5,000. Look to your chart to see that cash as an asset should be debited and notes payable as a liability should be credited. We date the transaction. We list cash first because it is being debited. We enter $5,000 in the debit column. We then list notes payable in the account title column. We indent the account title because it is being credited, and we enter $5,000 in the credit column. We have at least 2 accounts. We have at least 1 debit and at least 1 credit, and our total debits equal our total credits. So again, we're happy with this entry. Now let's look at the third event. On October the 2nd, Sierra purchased equipment for $5,000. We know from the transaction analysis that it is an accounting transaction. Cash and equipment are affected. The cash balance is decreasing and the equipment balance is increasing, both by $5,000. Look to your chart to see that cash as an asset should be credited and equipment as an asset should be debited. We date the transaction. We list equipment first because it is being debited. We enter $5,000 in the debit column. We then list cash. We indent the account title because it is being credited, and we enter $5,000 in the credit column. We have at least 2 accounts. We have at least 1 debit and at least 1 credit, and our total debits equal our total credits. So we are happy with this entry. This completes part 2 of the Chapter 3 lecture series on journal entries. Now let's move on to posting and the trial balance.